Off camera over there is Chris. If you want to scoot in and say hello, Chris.
Hello, everybody.
All right. Got 2/3, about 50% of the team here today. All right, 60%. All right. Important to note, market's trading higher. We broke out of key resistance areas yesterday, and typically the way the market traded yesterday, if you looked at the research that we put out yesterday, Pat compiles every morning on the blog, on the news site, it'll be under research. So the market is, just think about all the bad news we received this week. Walmart had its worst day ever. The stock goes down by $6 in 17 years. And, typically a lot of people think that Walmart is the way the economy is moving. I mean, there's 200 million people a week who walk through a Walmart store. And so if Walmart does well, that means the rest of the economy is doing well. And typically the middle class to lower end of the economy, because they're mostly the shoppers that are shopping in Walmart. They're not the people that really are shopping at Gucci, right? The people shopping at Gucci are always doing well, right? So anyway, the market could be I mean, the most important thing today is going to be the opening bracket. If we get an opening drive, all right, we think that the market has enough momentum with an opening drive that could take us up to the 2049 area, and we'll spell it out. I'll show it to you on profile. But there's another key chart that you put out on the blog. It's on the blog.
I did, yeah.
Okay, so make sure you go to blog. We'll try to put it out on the Twitter chart also. We got to understand that when the new site comes out, all this information is, when I start sharing charts, I'm going to show you where our research is at. You can go and get this, but you're going to have to go and register for free on the site and be able to access the research that we're putting out. Now we are adding CL, and we have added gold to that research. And we are moving quickly to get everything out and start the funding program, and also the new site will be out. So anything you want to add to before I get into the research?
Yeah, we want to mention that our new trading platform is also going to work on the Mac. So for those users that so far have been able to trade using your Mac, our new platform will actually offer that capability.
And also mobile apps. They'll have an Android and phone app that you'll be able to access the market. It's going to be really cool, really nifty. So let me start sharing screens, and let's get into it. So let me share the screen. All right. So here's the research. Here's the research that's put out every morning. Takes Pat about an hour and a half to put all this stuff up, right? And you can get all this information right off our blog every morning, right? First of all, we get to our disclaimer, right? So you understand how dangerous futures trading can be, right? And, okay, here's another disclaimer. I don't have to read it. Most of you should be able to read it, and it's also on our videos, right? Okay, so you can get all this information that's put out, average high from the opening for over the last 10 days. So that means on the opening print, whatever the opening print is, the average high has been 1,550 points from the opening print over the last 10 days. We do it, and Pat also compiles this for 10 days. Then we have the average low, 950, 1,300, average daily range. So all this information is available on the blog, and we put it out in different periods, okay? So then you have to look at here, average rotation is 22 ticks, which is 550 points. That's over a 5-minute period. So that's the average rotation
for the last 30 days.
The last 30 days. And then we put out support, resistance. Here you can find the bull bear zone, the VPOC, value area high, low, and so on. And then you will get to Pat's commentary. And this is the commentary. I'll just read it to you so you understand that when I do the video, it's a combination of what Pat's done and what I do, and then I'll get back to this chart that he showed here down on the bottom. Okay, it says the overnight session is in balance. This is slightly short. The Buyers continue to be in control of this market. Yesterday's action confirmed the willingness of buyers to push the market back up into the long-term balance area where we've spent most of the year prior to August correction. The trading range extends all the way to all-time highs. We'll see if today brings buyers again to get us further away from the 2015 support zone. A less likely hypothesis would be to re-enter the lower balance zone again that extends down to 1985. Look for the decision point to be at our bull bear zone of 2011. Okay. So then we've got this chart. Here's this long-term
If you
chart.
click on it, it'll expand out.
Okay.
Yeah.
Oh, there we go.
Twitter also.
All right. So we put that out on Twitter. You know that when we start the site, even though the research will be free, all this stuff will not always be put on Twitter. There will only be different tidbits of information we'll put out on Twitter. All right. So if you read here, it says breakout of balance into the 2015-2050 upper resistance. 2015 is now support if we are to continue higher. Okay. All right. Market holding lower range of the balance area right in here. Okay. So that was yesterday's low. I don't even think we took out, we missed taking out trading down to yesterday's VPOC of 1988.
Yeah, we had a gap also we didn't fill from the day session point of view. And if if we look at this, the balance area we're talking about is this whole thing right here that spans over several days. Okay. And we broke out of there yesterday. It held. This was a very good, healthy move. Lewis and I were arguing about this, somewhat unpredictable in how fast it occurred, but we do need continuation today, and it's not the typical start of a trend day because we probably will open slightly lower, since I think the overnight session is somewhat short, but it's missing an opening gap to really have an open drive and trade higher from here, but it doesn't mean we can't have one. So what we do need to look for is support at the bull bear zone or higher, and an open drive with all the internals going in the same direction. High take values, all the sisters going along with the move.
All right. So once you got the foundation for the research, right? Then we go out there and we start looking at other things, right? So I and Pat, and this is things that we've been doing. So that if you take a look at that purple line, I had on that as a long-term unfinished top, right? So we hit it yesterday in bracket P, and then when I see single prints from back in the past, and I'm not going to scroll back because I'm having a lot of trouble keeping my charts centered. Because I don't understand how to use them as well, but that'll, right. So we had single prints starting at 2019.75 up to 22.25. And if we keep going up this way, you'll see that we've got single prints starting at 23.75, ending here at 28.5. We've got a naked VPOC up here, this dotted line at 20.30.50.
43.50.
There's
20.43.50.
there's one here too at 20.30.5. Okay, I'm not up there yet. All right, and now we have single prints also from 20.36. All right, up to 20.41, and then here's the 20.43.50 naked VPOC. So when you get single prints and so on, that's typical of market that accelerated and also what we call poor structure, right? So that's why we always think when markets return, they're going to return to areas that have poor structure. So single prints are one line of letter that has nothing else to the right of it, correct? So this is why, and this is what, even though they're Pat and I and Chris, we do, and Charlie, everybody does their own research. We all have our tools. And then we get together and we try to get what I guess the term now is kind of confluence is the new
consensus.
Term. Yeah, consensus. And when we all arrive at the same conclusion, I think that's the key to the market. Now, the only thing that I'm going to give you a little warning about is that it's Friday, and typically the last Fridays we have had. It's all going to happen in the opening range, guys. Opening range is going to tell you whether we're going to get a big drive today, because typically on Friday we've been making a range in a B and C, and then the rest of the day we make a big range and in B and C, and typically we've been staying inside the BC range, and the market does sort of a back and forth. But based on the fact that we broke out, and I know, just think about it. I mean, I can't even believe sometimes that the market's trading at these levels with all the negative news, right? The Fed, we're data dependent if we're going to raise rates. Well, they didn't raise rates, so that means the data must be negative, right? And then you hear about what's going on in China and the global slowdown and all the problems with the EU. You've got Volkswagen, you've got Greece, now we've got Portugal. I mean, Puerto Rico. I mean, it's just like one big. And then I think they said the world economy. I think that the output right now is down 7%. So we're typically in some areas that are and what's happening in the U.S. markets. We're looking like we're trending back to the all-time highs by the end of the year. And
so I have lots of trees, so we can print all this paper.
Pat's philosophy is that we'll be okay as long as we have trees to keep printing paper. We'll just keep printing it, and we'll be okay, right? So we got the big value area today. Okay, the high is 2019 and a quarter. VPOC is at 2016 and a quarter, and we've got the bull bear zone at 2011, and then way down here in 1996.75. 1996.75 is the bottom of value. Okay. Let me bring in oil. I haven't put the value areas in yet. I will get them out to you. The research has also been being put out on Twitter. I'll get the value areas out to you. It looks like, it's still, it made lows yesterday down in the 44 area, and we're still trading in that range. Remember, we said yesterday, I think that oil, there's a gap up there at 55 to 56.50. I think oil will be, in the short term, may get the gap, but if it takes out $42, I think we're going back down to the low. Everybody in this room, except Pat and I especially, think that there hasn't been a low, and that's going to be the low that nobody believed that we were going to get. So usually markets make moves that are, I call them stupid lows and stupid highs, and it's because the stupid people sell them down there, I guess.
Yeah. It's going to make it extreme.
Yeah, it's got to make it extreme, right? So I've got support right now at $42. Under $42, I think the market's going to head back south. All right, I'll get the value areas out to you, and then gold trading higher again, 1183. I don't usually go out on a limb, but I'm going to go out on a limb on this one. Gold is going back up above 1200, and I got a target of 1206 and possibly 1230 by the end of the year. So I'm going out on a limb on this. I think that gold is definitely going higher, and like I said, gold is a demand product. You just don't know who's in the demand and why they're buying it. Now, one of the reasons it sold off because they expected the Fed to raise rates, and then people could move out of gold and actually put their money into something that earns interest. Gold does not earn interest, as a carrying cost for holding the gold. Yeah. And so sometimes it's not a very desirable at different times. But when you've got, go ahead.
Also, by us not raising rates, that implies that the dollar should be weaker.
Right.
For price of gold should be higher.
Right. If we raise rates, the dollar would be even stronger, which would cause more stress on the world economy and our U.S. companies. Right.
Price of commodities.
Right. Price of commodities. So, but I also I think that there are a lot of stress on the world economies, and when when there's a lot of stress on world economies. I mean, I read an article the other day, is the U.S. going to be the last domino to fall. So
They must have hurt you because they're feeding you now.
yeah, they're fading me. All right. So, we've got gold there, and then this one I am gonna keep patting myself on the back because since January I put a video out about bonds, and I said they will not raise rates at all this year. They will not. They cannot raise bonds. We have so much debt out there that the Fed owns, and our own banks in there. But we got to find a way to dump these bonds.
Right.
So if they can get them up to the 160 area, 165, they want to start dumping them up there.
Eventually, when they have to do something with that book.
Yeah.
And when they start evening out the book, they have to sell the bonds to do that.
Right.
As they do that, rates are going to go up, or unless somebody else got to absorb all that supply.
Right.
I just don't know who can do that.
Well, I had thought that when the bonds were up at 160, 165, that they were unloading, because at the time you had a lot of the people that were the flight to quality now is not get out of stocks and go to bonds. When I first started trading, the flight to quality was get out of the equities, run the bonds. But you had returns then, you had yield.
Right. They still do that on extreme days. You have the flush on the downside. The bond market will be going up that day.
Right.
I mean, that relationship still exists.
But there's the other existence right now, the other relationship because of global economies. When the other economies aren't doing well, they run out. So you got the Germans, the Chinese, Japanese, Central America buying U.S. bonds because I like to refer to us as the cleanest shirt in the dirty laundry.
Right.
At this point. So, and Dodd-Frank it's made it mandatory. If you look at the reserves, banks now, the bank reserves have gone from very small reserves to, I think I saw the reserves on B of A is like $450 billion in bonds. So pre 2008, it was very small amount of money. So I think that's those are important factors that and they're all moaning about that, Frank. But I guess the banks are healthier now.
At the expense of consumers.
You're right.
I mean, the spread between loans and interest-bearing instruments for savers is just historical levels.
Where are you going to get right?
You can't get anything on your savings.
I'm going to tell you a story. This is how I ended up at the Merck. So my father passed away. My mother I sold her, liquidated her house. I took their cash. They had $200,000 in liquid assets, right? And this is 1980. Interest rates were like at 17% or 18%, right? My mom, I bought her another house. Her bills were like $1,100 a month, maybe, not even. They're probably a little lower, right? And I took $200,000 in cash and I put it in a 2-year CD that was earning like 17%, right?
You should have put all that in zero coupons.
Yeah, well, I didn't know what those were. All I know is I walked into the bank. I said, 17% on 200 grand is $34,000 for the next 2 years. Her bills are we're ahead of the game, and it paid all my mom's bills. I ended up going to the Merck, and then the rest was story. And then she didn't need the 17% because she had my brother and I supporting her the rest of her life. So that's a true story. I mean, think about if you had a load of cash right now. Could you really put it in bonds? You couldn't put it in bonds. You were arguing with the guy today, right? What was the story? They were paying you.
I had a checking account with, let's say there was, some money in there, just enough money that you would expect more than $10 in interest for the year.
Right.
And they'd try to charge me an $18 fee for the month.
Every month.
Because the account balance fell below $10,000 for the first time this year. And
what a gas!
And then, obviously, it's such a high interest bearing account, right? I want to keep a lot of money there, right?
Right.
So the balance below 10,000, they're going to charge me $18 a month in fees. So they reversed it. You know, I can't say.
But you have to argue with them first.
Yeah, but I mean, it's
Any questions?
Yeah, so a lot of our users are having trouble with their entry once on trades. Need help? Is there anything you guys can kind of point in the right direction on?
people are having trouble with what entry.
Actually entering the trade with points to enter.
Wants to enter.
Yeah.
Okay. Well, I guess it depends on your style, depends on your risk tolerance. There's two ways you can do it.
Well, here you could enter it at the bottom.
Right. But if you keep in mind the big picture, and today we give you the bull bear zone, that would be a great place to enter a trade. And if you don't wait for confirmation, you can have a let's say a 2 or 3 point stop, and you'll know if you get stopped out that you are wrong, and no question. But if you wait for confirmation, by the time you get to the level you enter, let's say it bounces at 2011, let's make this assumption, and the market goes to 2015 or 2016, and you wait for the first little retracement to get in. By then, you still need to be below the bull bear zone with 2 or 3 points, so say 2008, 2009 as a stop. But your risk is much greater. So that's what you have to ask yourself. You want to risk 2 to 3 handles, knowing that if you get stopped out, the move is definitely not the right move. But if you're correct, your profit potential is huge, and you only risk 2 to 3 points. If you wait for confirmation, you have to risk possibly as much as 6 handles to know that you're wrong. And your reward potential is somewhat less because you're starting from a higher level. So that helps.
That should help, right? Everybody, and this is the beauty about trading, right? We can give you a lot of different scenarios, and so I'm going to take a look at the profile. All right, so I'm looking at overnight profile. I've got a high already of 2023. To me, this looks unfinished, right? At 2013.75, we got the bull bear zone at 2011, right? So I would look like if we got down to the bull bear zone, let me look past that, okay? All right. So we had a couple of tops way up there, 2012.75. If they got down to this area, right, and filled in this little bracket L here, okay?
And that's why we got the bull bear zone
Right.
today in that spot, because we're just right above the last row of single ticks here.
Right.
What you have LM showing now.
Right.
That's basically where we should support. And a good place to put the stop would be below the single ticks, single prints. So below KL, which would be about 2009 or so.
Right.
2009 up here. Move up a little, like right there.
Right.
Okay. So we could retrace through these single prints, but most likely we should bounce. At least that's the first. We always have to think in hypotheses, and we have to think in scenarios. So obviously we're bullish today, but if we go right through the bull bear zone, fill the single prints, and don't bounce from there, then we would change the scenario intraday. So.
All right. So also, for everyone who's been following us, me all throughout the week for the last couple of months. So Friday, this is the only thing that is making me a little suspect of will we have a trend day on a Friday, right? So typically the last couple of months on Friday, we've been making big ranges in the IB range, and then we spend the rest of the day filling in the range and consolidating. So,
by the way, since we printed the research this morning,
right.
We're back to basically a balanced session. They already corrected the imbalance, right? Slightly net short. It's already been corrected.
So the key is going to be bracket B, if we get a big opening drive that just keeps, an opening drive will mean that the market just opens up and just rallies.
Institutions buying.
Right, and they get in, institutions are, they're buying hand, with both hands, as I like to say.
High volume.
Right? And then, bracket C would open up, you'd have a very little retracement and then continue back up to the upside. So, so I'm a little cautious. Not that I'm not bullish. I'm bullish, and I think the market's going to 20, 49.5, 20, 50. It just may not happen today. So,
well, the first clue will be we take out the overnight high.
Right.
Most days, we either take out the high or take out the low of the overnight session. I think the chances of taking out one or the other are in the upper 90%.
Right.
And it's not very often that we take out both the high and the low of the overnight session. Right.
So if we take out the high, remember we have single prints here at 23.5. I would look for the market to accelerate from 23.5 up to 28.25. All right. Is there any other questions?
They want a copy of the trading rules so they can start preparing for the funding program. Put those out.
Not yet.
Yeah, because we have a new site that's coming out, so everything will be on the new site.
Got it. All right. Everyone. Oh, going back. Let me stop sharing. All right. So we're back here. Pat's got his motorcycle.
Yeah, I'm a motorcyclist. So.
He's a motorcyclist. He's got a crotch rocket. It's really not a motorcycle.
Hey, I'm a young guy.
I had a Harley. I'm a Harley guy. I'm more like I had a leather jacket and everything.
Right.
All right. And
you're missing something.
A big, large woman to sit on the back. What?
No, a tattoo. You don't have a tattoo.
No, I don't have any
You can't
tattoos.
be a real Harley guy.
No tattoos. No tattoos. You know what's going to happen? We're all going to be in nursing homes at 90 years old. All the tattoos that were on your arms are going to be by your ankle.
Yeah, that's
you got
right.
If you got them on your chest, they'll be by your waist.
Yeah, that's right.
Everything will start sagging.
Yeah.
But
we don't have tattoos.
Western Illinois this weekend. Baby Joe last weekend. 4 catches, 120 yards, a touchdown. Showing Pat him on TV. He goes, hey, your son's on TV? Pat actually watches no sports. So the Cubs are going crazy here.
I don't have time. I got to do all this research for you.
Yeah, that's right. Get back in the computer room. You don't even like sports. But anyway, West Illinois, Northern Iowa, big game this week. We're the best offense in the conference. They're the best defense.
I don't like sports, but who's in better shape yet?
Yeah, look at me. Yeah.
Who's in better shape? And I'm older than he is, too.
By, what are you, like 74, 75? You look good for that.
Yeah, I do.
All right. And Pat's going back next week. We'll be back in Houston. And but, we really did get a lot accomplished this week.
We did. Yep.
And we're moving towards getting the site up and running. So, everybody, thanks for following us, and good luck trading today.
Have a good weekend.